To business news now. Marcus Carlson's with us in the studio. Marcus, you're starting in China because there are concerns that this huge economy is actually now slowing down.
Yeah, a fresh batch of data suggests that growth in the world's second biggest economy is stuttering at least. And China's prime minister has conceded that there are severe challenges ahead for this economy. Li Keqiang says that he's more worried about jobs than hitting this year's growth target. As Delano de Souza explains, the premier may soon be put to the test.
Favouring jobs over economic growth, China's premier indicated Beijing would tolerate falling below the 7.5% GDP target for 2014. The government wants to create 10 million jobs this year, and it says the economy must achieve a growth rate of 7.2%, indicating China's economy would only be allowed to slip so far.
We will not pursue GDP growth above anything else. The GDP growth we want should benefit the people, help increase the quality and efficiency of economic development, and contribute to energy conservation and environmental protection.
China's economy is seen to have had a relatively rough start to the year. Newly released data shows investment, industrial production and retail sales grew at a slower pace for the first 2 months of 2014, raising concerns that the world's fastest growing economy is in risk of slowing. Some analysts believe that without the necessary stimulus measures by the government, it will not achieve its growth target. However, its recent actions indicate it plans on taking a step back. Last week, the government refrained from rescuing the struggling solar company Chari from making a payment on its debt, a move signalling further defaults would be allowed.
And we have seen those concerns about a slowdown in China, putting pressure on stock markets across the globe, really, this Thursday. If we take a look at the latest figures from Wall Street, you'll see there that the Nasdaq is down almost 1.6% this hour. The Dow Jones Industrial Average is also taking a beating this session, as well as the S&P 500 on those China concerns. First and foremost, in Europe earlier, we also saw the indices closing in negative territory. The Frankfurt DAX was down almost 1.9% at the close, with some real losses there for the London FTSE as well as the Paris CAC 40. Now, worries about Ukraine also weighed on shares globally this session. Investors, they're watching the standoff between the West and Russia over Ukraine very, very closely. Speaking in the German parliament earlier, Chancellor Angela Merkel turned up the heat on Russia. She said Russia would pay a political and economic price unless the Kremlin agrees to talks over Crimea's future. Merkel said EU leaders are prepared to freeze bank accounts held by Russians abroad and also impose travel restrictions. If we look at some other developments when it comes to this story, the OECD has suspended the process for Russia to become a member. The Organization for Economic Cooperation and Development is a club for advanced economies. It includes countries like the United States, Japan, France and Germany. Membership is seen as recognition of a country's economic development. Also in this story, Austria has arrested a Ukrainian oligarch with links to Russia. Dmitry Firtash is one of Ukraine's richest men and owns gas, media and banking businesses. Austrian police acted on an arrest warrant issued in the United States. The oligarch's group calls it a misunderstanding and says it doesn't have any links to the wider diplomatic context. Some analysts say, though, that it's an American signal that the net is tightening around Russian interests. We're going to turn to the Eurozone next. The European Commission has told Italy to stick to its budget commitments. The warning comes after Italy's Prime Minister announced sweeping tax and spending cuts on Wednesday. Matteo Renzi wants to reduce income and business taxes to boost the Italian economy, but the Commission says Italy has high debts and needs to focus on balancing the budget.
Italy is in the preventive arm of the Stability and Growth Pact, which means that it is required to focus on achieving its medium-term objective of a balanced budget in structural terms, and linked to this to respecting the debt rule.
OK, let's take a look at some news in brief finally. Shell says it's cutting exploration spending and laying off staff in the United States. It's seen as a sign that Shell, alongside other oil majors, is struggling to tap into America's shale gas boom. Shell made the announcement as it said 2013 had been a challenging year. Full-year profits fell by more than $10 billion to $16.7 billion in comparison to 2012. Investment firm Altice has sweetened its bid for French mobile operator SFR. French newspaper Le Figaro says the company is offering another 850 million euros in cash. Altice is the majority owner of cable company Numericable and wants it to join forces with SFR. Altice is facing off with Bouygues, which is also eyeing the mobile operator. The board of SFR's owner Vivendi will meet on Friday to review the different bids. And 20 years after opening for business, Eurotunnel says it's finally satisfied with its financial situation. The operator of the tunnel underneath the English Channel has reported a net profit of 101 million euros for 2013. That's 3 times higher than in 2012. Eurotunnel says both freight and passenger traffic through the railway tunnel grew last year. I'll be back again with more business news next hour. Back to you now, Laura.
Marcus, thank you very much indeed. Let's turn our attentions now to sports. Dan Levy's here with us in the studio. Hi there, Dan.